Thank you, Andy, and good morning, everyone. So I'm from the business finance team here at Bayes. We've been working with colleagues at HM Treasury and the British Business Bank on schemes to make loans available to SMEs to complement the grants and other support that's already been discussed. I'm going to tell you about two of those schemes this morning. Can I have the next slide, please? So the first scheme, which launched in March, is the Coronavirus Business Interruptions Loan Scheme. This scheme supports small and medium-sized businesses with a turnover of up to £45 million to access a range of finance products, including loans, overdrafts, or invoice and asset finance. They can access products for up to £5 million over a term of up to 6 years. Payment of those loans is supported by government. We will make a business interruption payment, which means in the first 12 months, any interest on that product is covered by the government, as well as any lender levied fees. That means SMEs benefit from no upfront costs and lower initial repayments. In order to support banks to lend through these schemes, we provided a guarantee of 80% on each loan, and that should give lenders further confidence in continuing to support SMEs through the crisis. And the scheme launched in March, and as of April 29th, over £4.1 billion of loans have been issued through the scheme, and that's going up by a couple of hundred million every day at the moment. So we're seeing some really good figures and that money getting through to businesses, which is great. Eligibility for coronavirus business interruptions loan schemes. You're eligible if your business is based in the UK, if your business has an annual turnover of up to £45 million, if your business has a borrowing proposal which a lender will consider viable if not for the pandemic, and if you can self-certify that your business has been adversely affected by coronavirus. I want to just say a little bit more about that viability criteria, because we've had some feedback from some businesses and some lenders that was causing trouble. The reason for that was that it's difficult, and we understand why it's difficult for some businesses to give evidence about their future viability, so their kind of ongoing cash flow or the business plans, given the uncertainty that the pandemic is currently causing. We can see why that's the case. So we recently announced that we've amended that viability criteria to remove the forward-facing elements. So essentially, if you can show that your business was viable before the pandemic, that should be sufficient for you to get through that viability test. In terms of accessing a CBILS loan or another product, the scheme is delivered through commercial lenders, including all the major high street banks, and there are over 50 accredited lenders now able to offer the scheme. So you can either go to your usual bank, or you can search the Coronavirus Business Interruptions Loan Scheme on gov.uk. That can take you to the British Business Bank site, where you can find a list of all the available lenders. And there's a good range of companies up there, including banks, including specialist invoice and asset finance providers, and some alternative providers, including people like Funding Circle. Can I have the next slide, please? Now, we did have some feedback on the CBILS scheme that for some businesses it was remaining challenging to access finance. You've seen some press coverage of it, sometimes looking at the speed at which loans were being processed, or sometimes the complexity for small businesses. In response to that, we've recently introduced a new scheme called Bounce Back Loans. Bounce Back Loans was first announced by the Chancellor last week, and it's gone live yesterday on the 4th of May. Bounce Back Loans is a really simple scheme. It helps small and medium-sized businesses affected by coronavirus to apply for loans of up to £50,000. The government guarantees 100% of the loan, which means you don't need to go through the usual credit check processes you would go through with the banks, which makes the application much quicker. And the idea is that for most companies, you should have the money in your account within days. Again, there's no fees or interest to pay for the first 12 months, and the interest rate is actually capped by government at 2.5%. Furthermore, in order to make it even easier for SMEs and reduce the pressure on you as you manage your way through the crisis, no repayments are due during the first 12 months. There's a 12-month payment holiday built into the scheme design. It's a simple application form, around kind of 7 sections, and the application questions are standardised across lenders. So wherever you go to for the loan, you should be being asked the same questions in the same way. You can't apply for a bounce back loan if you've already got a CBILS loan. However, if you want to transfer a CBILS loan into the bounce back loan scheme, that's possible to do so, and you can contact your lender to do that. Can I have the next slide, please? Eligibility for bounce back loans is very simple. Your business needs to be based in the UK, and you need to be able to self-certify that you've been negatively affected by the coronavirus pandemic. Scheme will again be delivered through a network of accredited lenders. We launched the scheme yesterday with 10 lenders and more coming online over the coming days. so you need to speak to a lender to access a loan. And as I've mentioned already, if you've received a CBILS loan and you'd like to transfer it into the bounce back loan scheme, which you may wish to do so for benefit from the different interest rate, you can arrange this with your lender. You should discuss the terms and conditions that would apply there. More information, you can search bounce back loans on gov.uk. We're really hopeful this scheme is going to make a really big difference to businesses. Well, obviously, we haven't seen any official figures yet, but there's coverage in some of the press this morning suggesting that we had close to 100,000 applications in the first day of the scheme. So it's clear that hopefully it's really hitting a need, and we hope it will make a really big difference. Thank you. I'm going to start with some questions on the bounce back loan scheme. So we had a couple of questions just about clarifying the eligibility criteria. So the scheme is open to any business who can declare they've been negatively impacted by a coronavirus, as long as your business was established on or before 1st of March 2020. So I know that we had a specific question about eligibility of scheme for new companies, and as long as you were established before March 2020, then you're eligible to apply. In terms of sort of criteria around viability, all you have to do is basically self-declare that your business is viable beforehand and give evidence of your turnover. So it's basically done on self-certification basis. We had a question about eligibility for loans for those businesses who aren't looking to grow. So this is a question from D, who said, I don't have a plan to expand or to employ others, and therefore my business plan was to continue as I am. Can I still access a business loan? The answer is yes. You don't need to be looking to grow your business. And as I say, for CBILS, we've removed the forward-facing element of the viability test, so it's focused on the viability of your business before the pandemic. So there's not a requirement that you should have specific growth plans in place. We were asked whether or not the bounce back loan scheme is a personal loan or a business loan. It's a business loan. We are aware, of course, that a lot of SMEs, particularly sole traders, may operate their business through a personal current account. That doesn't exclude you from applying for the scheme, but it is a business loan. We had questions on how much businesses can apply for a bounce back loan. So you're going to get a loan from between £2,000 and £50,000 through the scheme. That's capped at 25% of your turnover. So in order to access a loan of £50,000, you need a turnover of £200,000 and so on and so forth. On the coronavirus business interruptions loan scheme, business asked what is the definition of an SME for the purpose of the scheme. It's based on turnover effectively. So to access that scheme, your business's turnover must not exceed £45 million a year. And for the coronavirus business interruptions loan scheme, the borrower can't be an individual other than where the individual is a sole trader or a partner in a partnership and it's acting as a business capacity. We had a question about business viability again. I think we probably covered this in the presentation, but it's now a historic, if you like, viability test where you must be able to show that prior to the pandemic you're a viable business and that your borrowing proposal must be viable were it not for the current pandemic. Hopefully that's been clarified. Someone asked if the scheme is appropriate for startups. The scheme may be suitable for startups if your business activity is primarily UK based. The British Business Bank also still offers the Startup Loans Programme, which is specifically aimed at startups. For bounce back loans, certainly startups are an option as long as your business was established before the 1st of March, you're eligible to apply. And I can say the government is also looking at establishing a specific option for startup companies and those companies where debt might not be appropriate. That's called the Future Fund, and business more detail on that will hopefully be announced in the coming days and weeks. I've seen a couple of live questions as well. I think these are all on bounce back loans. So somebody asked, I don't bank with anyone on the current list for the bounce back loan. Is there another way to apply? Yes, there is. You can go to any accredited lender under the scheme. You don't have to go to your bank. If you search for bounce back loans on gov.uk or go to the British Business Bank website, you can find a list of those lenders who are currently accredited, and that includes all the major high street banks. And a couple of people asked if early repayments were fine under the bounce back loan scheme, or if there's any penalty for repaying the loan early. There is no early repayment fee allowed. You can repay it at the speed you want, so early repayments are completely fine. Thank you.